Welcome to the Advance.org Roundtable with Leanne Kemp. My name is Maria McNamara and I'm the CEO of Advance.org. Today's program will be introduced by our chairman, Yasmin Allen.
Good morning, Maria. Good morning, everyone. I'd just like to acknowledge the traditional owners of the country from wherever you are joining us, and I pay my respects to Aboriginal and Torres Strait Island elders, past, present and emerging. My name is Yasmin Allen, Chairman of Advance.org, and it's my great pleasure to welcome you today to Advance's Global Digital Roundtable with our guest of honour, Leanne Kemp, founder of Everledger. I extend a warm welcome to colleagues from Australia and around the world joining us today from Hong Kong, Indonesia, Japan, Singapore and the USA. What a great turnout. I can see it's many still joining now, which is great. I also acknowledge and welcome Advance board members and our global ambassadors. Advance is Australia's only diaspora organisation. We celebrate our overseas Australians and we provide the opportunity for them to share their knowledge and IP back home for the benefit of all Australians. We see our diaspora as an asset, a resource for Australia. Advance connects with this resource through our programs such as today's Roundtable and our annual Advance International Australian of the Year Awards, which will be held next month on the 15th of October. I hope to see many of you there. Our past Advance Award winners are called Game Changers, and Leanne Kemp is one of our Game Changers after she won the Advance Technology Innovation Award in 2018 when she was living in London. In Australia and around the world, COVID-19 has caused a loss of work that is twice as high and 10 times as fast as the last two recessions in our history, a significant economic event which will be with us for some time. COVID has also slingshotted us into a future world, one in which digital has become central to all of our interactions, forcing both organisations and individuals faster up the adoption curve. One of Australia's future planks of success will be how we embrace this technological era, how we train our population to benefit from these new opportunities, to create more jobs than we shed, and to build global businesses. As many of you know, I serve on the board of the ASX, and we're currently building one of the world's first industrial strength blockchains to replace our post-trade settlement system, or CHESS as it's widely known. So I have a particular interest in this technology, and we'll hear more about blockchain from Leanne. But this 2-year project for the ASX is already creating significant new employment as people come home from all around the world to work on this world-leading project. We're creating an ecosystem of blockchain expertise right here in Sydney. They'll contribute to the talent and skills needed to drive our economy forward. Shortly, I'll introduce our guest speaker, but I'll just briefly outline today's proceedings. After Leanne makes her opening remarks, which will be for about 20 minutes, our Advance CEO, Maria McNamara, will facilitate Q&A. And I'll close today's session, someone's clapping, I'll close today's session at 11:15 a.m. So to ask a question, just click the emoji on the bottom right of your screen or wave your hand and we'll see you. So let me introduce Leanne. As I mentioned earlier, Leanne Kemp is the 2018 Advanced Technology Innovation Award winner. Since receiving her award, Leanne has returned home to take the role of Queensland Chief Entrepreneur. Leanne founded Everledger in 2015 in London. Everledger uses blockchain technology to bring transparency, trust and provenance for diamond transactions and a range of different products. Using her extensive background in technology, business, jewellery and insurance, Leanne has built a global verification system, an immutable ledger for asset ownership. And the why here is really important, but I'll let Leanne tell that story. Last year, Everledger raised $20 million in a round led by Tencent, the Chinese technology behemoth, who earlier this year bought into Afterpay. Leanne said she expects Tencent's investment to strengthen Everledger's expansion into China. So this will be an interesting area to discuss given recent geopolitical events. Leanne's other awards, and she has many, include Innovator of the Year in 2016, 2018 Women in IT Awards in London, and the AIM Global Alan Gilligan Award in 2019. Her role with Queensland Government is to develop that state's startup ecosystem. She is the first female entrepreneur to hold this position. Leanne is a member of the World Economic Forum's Blockchain Council, and she's co-chair of the World Trade Board's Sustainable Trade Action Group. She also serves on the IBM Blockchain Board of Advisors. More recently, Leanne has been appointed to the Global Blockchain Business Council as a regional ambassador for Australia and adjunct professor at the Institute for Future Environment at the Queensland University of Technology and Blockchain Advisory Board member for the OECD. So we're very grateful that Leanne has the time to speak with us today. So please welcome Leanne Kemp. Thank you.
Wow, what an introduction. It's hard to follow this, but let's say we've got 20 minutes together, and I thought I'd talk about my most impassioned vision for the world, and it's at the intersection of blockchain and supply chains. It's fair to say that in the course of 20 years experience that I hold in information technology, I've seen many tech trends come and go, whether it be big data, the cloud, mobile, VR, the list actually goes on and on and on. And in the past few years, blockchain technology has made a tremendous splash, promising new ways of working and even doing business. But why is it that some technologies will succeed while others simply move through the hype cycle? And for me, it comes down to invention versus innovation. Now, invention is simply the creation of something new, while innovation involves applying that new thing to a real world problem or creating a novel approach. And when it comes to blockchain, recent real world applications well beyond finance, and as we heard about our endeavours with CHESS and the ASX, it's one of the leading examples of blockchain technologies in finance. Many things are moving beyond finance that are helping to accelerate blockchain's transitioning from an emerging technology to an innovative technology. And so I guess many people ask, what is blockchain? And it's definitely more than cryptocurrencies like Bitcoin. Blockchain technology is based on a concept of distributed ledger. Instead of having a central authority, a power that is distributed then across many participants on a network. And blockchain became first most popular in the way to transform finance off the tail end of cryptocurrency. But the underlying principles of traceability and decentralization go hand in hand with supply chain management. So another question is, how are blockchains and supply chains connected? Before we dive into the technology tide, let's look at the products around us today. In the grocery store, the medicine in your cabinet, and even through the commerce brands that we purchase online. If you compare today's landscape to 20 or even 10 years ago, these products have drastically changed. But so too is the consumer consciousness around those products. Consumers are demanding more variety, different packaging, personalization, which of course has led to an explosion of consumerism and new products on the market. Products, more than ever, are global in nature and are sourced from various parts, componentry, and commodities in the world. And whilst we all benefit from this as consumers, it's also created incredible, massive challenges when it comes to bringing these products to market, especially if we're starting to transition into a stakeholder view of the world. For brands to support this level of product development, they have to work with more suppliers and partners than ever before. And typically systems have only ever given the direct connection to the supplier, not just the supplier, but right the way back in the diamond industry where we work at the source of the mine. Now, with consumers and companies connected by the internet, supply chain networks have also become even more interconnected and global than ever before. And COVID presented a really interesting challenge in terms of nationalisation and bringing manufacturing back as our core economic strategy. Imagine working at a leading brand and trying to juggle multiple products and suppliers across geographies. It becomes difficult to pinpoint where exactly something goes wrong. and even to understand where bottlenecks are occurring. And I guess that's where blockchain comes into play. By digitizing specifications around the product, the packaging, the formulas, and so forth, companies can create a digital thread or even a fingerprint of an object through the entirety of their supply chain. And this digital thread creates transparency and traceability between brands, their suppliers, and the consumer. Not just about where does it come from, but in a circular economy, where does it go to after it leaves me? Traceability is also an outcome of improved supply chain collaboration. One person's waste can be another person's input of value. So if a packaging company is making an update to a box that's used by multiple brands, everyone, of course, needs to be on the same page. And brands can come up with a packaging, particularly around sustainability, climate, environment, that no longer meets the needs of some of their penultimate customer, being that consumer. Now, in my experience, customers don't usually ask for blockchain. It's not really at the forefront of their discussion point. Many customers are asking for new and better ways to collaborate with each other. Understanding supply chain transparency is core to fair markets. And in fact, many were already doing business together on many different technologies, and blockchain is a way to bring that together in a centralized halo effect, being distributed, of course, in the technology itself. So there's some insights about how IT leaders can work with supply chains to successfully deploy blockchain today. Most IT leaders, even CEOs and CTOs, should start by examining their supply chain. Where are the most external partners involved? Where are the blind spots in that supply chain? What are the current methods of communicating and exchanging information? And it's surprising to find just how many supply chains are reliant on email communication today. And the connection points, these connection points or these darkened shadowing moments are ripe for applications for blockchains. But of course, companies don't need to immediately revolutionize the way they're working. In fact, it can sometimes be completely counterproductive. Instead, companies should focus on the evolutionizing rather than revolutionizing their approach. How do you co-evolve an industry? How do you co-evolve a vision and a value system for an industry or for a product? And many companies are digitizing and mapping specifications, of course, is the first critical step. And through that first critical step, that effort can create more transparency than ever before. Be willing to ask questions. Then, of course, over time, as more suppliers and partners begin to work in a commonplace platform, companies are able to deploy blockchain as its underlying connected technology. It becomes the connective tissue, the sinew to enable the limbs of a supply chain to work. So you probably won't hear many blockchain leaders or even IT leaders talking about the deployment of blockchains itself for their supply chains, but rather an application that leverages this technology. And let's admit, there are definitely problems in the world when it comes to cybersecurity, the way upon which we architected the World Wide Web. And if I was really one that could crystal ball into the future, we're able to see the transitioning of the core protocols of the internet, moving from what we once knew was the World Wide Web to the World Wide Ledger. So when this starts to happen, blockchain will officially have moved from an invention, something new, to an innovation, something that's applied and creates more value. It's a proud moment for Everledger. We're about 5 years old, and you would have seen, if you stalk us online, the transitioning that we've made across so many different industries, answering the question, where does it come from? That burning question that sits within many consumers within the diamond industry, and some off the tail of that Leonardo DiCaprio's Blood Diamond movie, we're able to answer that question today. And of course, blockchain itself won't solve for physical traceability in supply chains. It must come together in a symphony of technologies. The ability to have an object identity is one building block. To enable the footprint of data to be understood in a taxonomy where everyone within that supply chain can speak a similar data language. And then layering on top of that, the consciousness of people and planet. Our social contract with this planet in terms of sustainability, climate and environment, the impact that we're having on our natural resources, whether it be the use of water in the textile supply chain, and even CO2 with the diamond industry. We have the capability today to capture and mark and measure the impacts that our products are having on planet. And of course, humanitarian. How are we dealing with child labour, the fairness of pay in global supply chains? What's really interesting in terms of COVID is supply chain at the very heart of economic recovery. And when we think about what hit hard here was the unravelling of cooked spaghetti of the world supply chains. Our ability to bring together the technologies that were needed and the manufacturing capabilities to bring some of the most critical health services to market. Supply chains around PPE, ventilator machines, even body bags. It's incredible once you understand the trueness of those supply chains globally, just how hyper-consolidated they are in geographical locations that were difficult to either reach into or to do business with or to transport goods out. Yet, here we are in Queensland, one of the greatest exporters of goods and services in the whole of Australia comes from Queensland. And fair to say, we have some of the most incredible natural resources, whether it be lithium and cobalt and vanadium in the battery supply chain. And yet, we are just a commodity exporter. It's time to be able to bring together incredible technologies and the natural talent that we have across Australia and think about next generation manufacturing. Blockchain will play out in incredible ways, and one of my hopes for the technology is that we won't be speaking about it. Just as I said before, if it becomes digitally ubiquitous, it becomes embedded within the protocol of the internet as we migrate to the worldwide ledger instead of the World Wide Web, then of course those protocols will live through at a hyper-secured layer. The questions about the storing of privacy of data can be answered today in constructs of blockchain and cryptographic sequencing like homomorphic encryption. We are able to share securely information, store privately, and ensure that the answer to the question is given with truth, yet without disclosing in a plain text form. I'm looking forward to what is being delivered out of the crisis. And of course, it's three waves of a tsunami. First, the health around COVID. Second, the economic. And third, there is still a wave around climate and environment, of which we don't have the vaccine for just yet. And blockchain technology as one rising layer of next generation internet technologies is here to stay. Australia is well positioned. We have some of the most incredible scale-up companies and example projects in the world housed right here in Australia, whether it be the ASX, Power Ledger in Western Australia, Everledger, and more recently, the Good Design Awards were given to Beef Ledger out of Queensland. So there are showcased examples of excellence across this country, and deeply in the state of Queensland, we also can make a great transition into Cleansland, bringing together these technologies to think about now not just climate and environment, but the economic transitioning around this, the circular economy. And yet provenance plays a pretty big role there too. Asking the question, not just only where does it come from, but where does it go after it leaves me? Batteries, you know, one of the biggest, most potentially conflicted supply chains in the world, will become front of mind with the race to rare earth minerals that are on. How do we actually bring together traceability to know where it comes from? But then how do you design for disassembly? How do you reuse the lithium pouches that sit within these batteries and repurpose it into a next generation? Tyres on cars as well, when we start thinking about the legislation that's being passed in Australia at the end of 2021 with banning exports of whole tyres. All of these opportunities sit and exist as an economic construct for the future that finally brings together the consciousness of all stakeholders of a supply chain, not just the shareholders of the business that are connected to it. So I'm looking forward to what the future holds, because blockchain technology helps to become one of those building blocks into the future. Thank you.
Wow. There was so much in that power-packed presentation, but there always is when you take the microphone, Leanne. Thank you so much for the questions. As you can imagine, we try to keep the numbers low for these roundtables so that everyone has a chance to participate in the conversation. And we ended up closing registrations early, such was the demand for the session, but not before squeezing in some very special friends and guests of Advance, some of whom Yasmin welcomed earlier. There are a lot of questions that we've already received, and I will go to them. But I wanted to begin with just one overarching question, and that is, does the regulation keep up with the technology in this space?
Minister Karen Andrews worked very closely with a number of thought leaders in the blockchain space and created the Australian National Blockchain Roadmap, which is a strategy, and it was released earlier this year before the heightened anxiety in COVID. And one very particular work stream and committee that is working on that is deregulation and privacy. And so arguably the question is that blockchain and cryptographic sequencing and homomorphic encryption, these incredible technologies that are raising maturity, have the ability to either push up into policy or enable a far better way to audit and bring together the overlaying conscious layer of supply chains and even regulated environments. So I would say Australia has made a pretty deliberate commitment to understanding that the technology around blockchain and artificial intelligence can't necessarily also just live in a silo effect, that it's actually bringing together the exponential power of individual disciplines of technology. When we bring them together in a bridge, entirely new applications can be created out of this technology. So we've seen some advancements at the OECD, but what we have done now in Australia is have a roadmap. The roadmap is clear. The deliverables in terms of how we're disciplining up the best of our brightest minds and activating those in innovation agendas around each of the individual states is probably the most exciting part of the agenda for 2021 for me, because we will come out of COVID in a way that we need to start to rethink even our agreements internationally. The free trade agreement that exists with the UK, blockchain technologies with AI can give us the ability to have right to repair legislation here in Australia. And when we think about manufacturing, we mightn't be able to compete on cost. But if we have the right to repair, we have the materials, we have all the natural talent, we've got everything we need. We just need that offtake and the demand. And I think these technologies are coming together right at the right time.
Fantastic. We were asked a question about the ledger system interface. So Thomas from Allen Partners asked the question, how does this ledger system interface or not with the ATO's surveillance systems? And is the purpose to prove provenance or chain of custody?
So there's a lot of layers to that question that's being asked. So firstly, let me pick off the integration directly with the ATO, I think was asked. I'm not aware of any integration work being done directly with any data exchange with the ATO, both in supply chains or even in privatised data at all. In fact, I'm not even seeing them as a major stakeholder in any of the larger global discussions or even in the blockchain roadmap works. That's not to say that the ATO hasn't explored the power of the technology, but it's certainly not front-facing, and nor am I aware of any interactions or any integrations in place. The technology itself is, of course, is web-enabled, and by virtue of that is also a number of disciplines exist in terms of it being enterprise level and or private or public blockchains. The integration layer from a technology perspective runs with the existing web protocols. So you can still make interactions with the blockchain through API constructs. There's TLS layers that can exist in terms of security. So just as you would deploy any other web-enabled technology, the interactions back into that node and into the database layer of the blockchain still exists in that same discipline. So therefore, in the early stages of Everledger, when I was thinking about building a a blockchain team. There were no blockchain expert engineers with 10 years experience that existed, but there were good database engineers, there were good cryptographers, there were those that understood the construct of law, and bringing those disciplines together now brings together pretty much a good blockchain engineer, which we see in the environment with sort of, 5 to 8 years experience do exist in the globe. The question about supply chain traceability versus chain of custody, it's a mixture of both. The diamond industry affords us the perfected use case for blockchain. The reason is diamonds are unique by their very nature. They have a puff, a physical unclonable feature that can be digitally represented in the blockchain. So we don't put a serial number on it, we don't put a barcode on it, we don't stick anything to it, but we can actually completely replicate that in a digital form, which of course then asks the question, can you replicate a natural stone to a synthetic stone? And the quick answer to that is yes as well, which is why our use case was so perfected at the right time. Underlying provenance helps to de-risk supply chains. So anyone who has risk over supply chains is interested in provenance-enabled data, including insurance companies and banks. So the wide cases are huge in terms of the applicability of that data.
Thank you. And we have a question from Craig Allen, Chairman of Office. Craig, you're on mute. Thank you.
Yes, look, my interest in is actually government and regulation as well around being able to track the provenance. But more importantly, how is this being treated by the Australian government? I also read the blockchain report that came out earlier in the year, but how is it also being treated at the international level?
Blockchain has had maturity globally for quite some time. There's been many times we've been, as Everledger, in the White House, and we also sit as a part of the working policy group at the OECD as well. And so it's fair to say that the Futures Council of the World Economic Forum was first created in 2016 for the future of blockchain. So there's a lot of maturity globally that's running. Data provenance is critically important. The origination of data, the rights to data, and that's where blockchain plays a very important role. What we have seen, which has heightened conversations globally, is around the movement of people, the identity of people, and more importantly now more than ever, how do we bring together a health passport or an immunity passport that might be coupled with international trade for travel bubbles? And many countries are exploring the use of technologies like blockchain or even the cryptographic sequencing that sits within the technology to enable that to occur. And that's where you push up against legislation around privacy, cross-border data sharing. Is there a way that we can bring together a data sovereignty in this country? And I guess we're in a schizophrenic frame here in Australia. In one respect, we're openly exploring these hyper-secure technologies like blockchain, and yet in other hallways within government, they're saying, give us a backdoor to the encryptions that exist for anyone that houses data here in this country. And I'm not sure that we're well coordinated just yet on understanding where that plays out, which is why I'm hopeful that the blockchain roadmap and the recent engagement, the deeper engagement with committees around deregulation using this technology might rise some better sobering conversations about what really is important in terms of cyber data sovereignty and data provenance. But fair to say it's a long way off.
So just on that, I mean, blockchain, one of the big purposes of blockchain is the anonymity. But my understanding of the ledger is that pretty much anyone can read it because it's a distributed ledger. And there is a lot of work being done by some of the more sophisticated countries, such as China and the US, in actually removing a lot of the anonymity.
So this was a very early set of tests that were put to the market quite some time ago. And I think it led to Silk Road and the jailing of a number of entrepreneurs in their endeavors. So, I guess when we talk about being anonymous through blockchain, again, it's an urban myth that's running around the world. I'm not sure that was really one of the power positions as to what blockchain afforded. It afforded a way to ensure the reduction of double spend of a digital currency and enabling that to no longer be clawed back, right, through an environment. So, we were always able to, since the very first iteration of Bitcoin, enable traceability back to the identity of those, which has to triangulate other technologies and other web fingerprinting to enable us to be able to track that down. The big question for me is less about being anonymous and more about what does this mean in terms of quantum computing. And if quantum computing breaks the prime origins, then there's an entirely different set of issues to be resolved across the world in terms of security. So it's, for me, that is really the big question on the horizon for blockchain and cryptographic sequencing as a whole.
Thanks, Leanne. And on that theme, on the theme of the ubiquity of blockchain, I've also got a question from Glenn Barry. Glenn, if you'd like to remove your mute. Okay, he might be having a problem. He's asking at what point the general population will understand and easily interact with the blockchain applications, which you alluded to earlier, but if you could give us some sense of timeline.
Look, blockchain effectively is a series of protocols that are network protocols that bring together a way upon which we can wholly agree on truth in terms of data, sequencing the writing of that into a database, and the protocols to connect that in the internet. We publicly released, and it's in all of the Alexander McQueen stores today, a wholly blockchain-enabled application that is smart and intelligent labeling within the fabrics of the goods. And so when you say how quickly do people interact with that, if you walk into a Tiffany store today, the origin of the diamond is being displayed. You walk into an Alexander McQueen store today and buy an Alexander McQueen jacket, you will be able to see and interact with that as you would interact with that in terms of being a collector of a piece of art, which gives birth to an entirely new series of circular economy and aftermarket applications. So the transfer of digital currency across the world in real-time settlements has been in the market now for the better part of 8 odd years. And so users are interacting with it on a daily basis in various different industries and various different interaction points. As I said before, we don't think about the interaction with SMTP or HTTP. And I probably, no one mightn't even know what that is, but that's the underlying protocols that give us the ability to go www.google or gives us the ability to send an email. So I think the protocols of blockchain will become widely embedded as W3C, which of course is Tim Berners-Lee, in the inventor of the internet, is boots in and has been boots in on blockchain and its related protocols since pretty much day one. So we will all be interacting in some form of distributed enablement of data within the next 5 years, maturity hitting within the next 10 easily.
Thank you. Benjamin Wong, who's a director and advisor from Hong Kong, has a question also about the ecosystem. So Benjamin, would you like to ask your question?
Hi, I hope it's working there. Can you hear me?
Perfect. We can hear you very well.
Hey, thanks for that, Maria, and also thanks, Leanne, for that really interesting presentation. It's really insightful. So I guess in Australia, based on other country models internationally, how is the ecosystem better or not when compared to those other countries? So someone earlier mentioned advanced economies like China and US, but in particular, my question is also focused on funding, talent, and people. Like, you know, Australia is a unique role traditionally, but in this new sort of innovative information age, disruption age, what is your view on sort of where we sit in the global scale of things?
Look, so there are a number of sort of comments I can make to this. Firstly, I think in some respects, people, talent, funding, entrepreneurship, startups and scale-ups, I'm Queensland's chief entrepreneur. So, you know, we were one of the first states in the whole of Australia to have a chief entrepreneur be appointed and an office that really engages with the inventors of the day and in universities. And now we're fast followed by South Australia, and we've had recent, you know, curiosities coming our way from UK and Scotland about having a similar construct. So we're leading in that regard. We do see really interesting levels of funding and curiosity being made available out of some of our three-tier government system, from local governments right the way through to our federal government. But we're not quick enough in various forms of Australia to make those economic transitions around new business modelings or around, and I think part of it has been that we haven't had, the existential crisis facing Australia. We're a prosperous nation. We are still vastly export and commodity driven. And when we see and understand, when we look at the Fortune 500 companies of 20 years ago versus those that are listed today, technology stocks are really leading. We do have some very early showcased examples of technology unicorns here in Australia, Atlassian being one example, Canva out of WA, our recent one was Safety Culture in Queensland. So I think there are examples of where technology companies are leading globally, but I think we haven't had the crisis moment to create that well. I think we're doing it as a fringe. I don't see innovation threaded deliberately across all tiers and all departments of government. I still see it sitting siloed. And I feel like it's the ghost that walks the hallways of Canberra. And so I don't think we're doing fast enough. Why is that? There's probably very many different reasons as to why. But will it change within the next 5 years? Not likely. But is there an environment that's being created today where trade must be engaged in a more digital sense? We must enable far better trust mechanisms across the web and across global trade. And so I do feel as though we are in an opportunity that transition will come because the environment will create it. That economic environment will create that rapid change mechanism.
Thanks, Leanne. If you have a question, simply use one of the emojis on the bottom right hand of your screen, or put your hand up and a member of the team will alert me. I'm about to go to a question from Joseph Kwok, but in the meantime, while he prepares, there's a question here from Marcus from Third Eye Management, where he said alignment to the UN Sustainable Development Goals helps consumers to identify what companies are serious or at least knowledgeable enough to recognise that sustainability is key for prosperity and market growth. How do you advise us to convince companies that measurement and outcomes are needed to demonstrate authenticity?
So I present, and I'm presenting next week at the United Nations General Assembly on the SDGs. So it's actually a topic of conversation that has continuously been on my agenda for the last 5 years. I would say there's work to be done at the SDG level. It's fine that we have those 17 goals, but unless we can fast move towards a data taxonomy that sits beneath it to understand the what we need to measure and the benchmarking of what that measurement should yield to, then again, it's only going to sit as some guiding light principles rather than activated standards. And I think we need to rapidly transform into activated standards. There's interesting work that's being undertaken right now in the movement in finance. When we think about the announcement that came out from BlackRock late last year, the work that's been undertaken by the Sustainable Data Alliance, which was a World Economic Forum, as well as Thomson Reuters and Refinitiv, and some of the largest investors and banks in the world are now participating in that. And it's driving it from perspective of saying, we as financiers, capital markets, want to know and understand more, need to see more. And if you don't show us, we either won't finance you or you're going to be financed at an insane cost. And I think that finance markets have an incumbent responsibility to help in the transitioning towards it, but there's more work to be done in that lexicon of language and the taxonomy of data. And that's the work that needs to be put forward.
Thanks, Leanne. We have a question from Joseph Kwok. Joseph, if you'd like to remove your mute and ask your question. Okay. Joseph's question was, what are the 3 top qualities to possess to thrive in the new economy? And Joseph is the president of the Australian Alumni in Singapore.
So look, I would definitely subscribe to the softer skills of being a good human is very important in leadership as much as within the day-to-day running of a good life. But in a more deliberate manner, I would say there's a big transition that's underway between managerial logic and innovation logic. The ability for those to be able to encounter change at a rapid pace, deal with the inbound of interconnected dependencies is very important. And I wrote about this as Queensland's chief entrepreneur more recently. And how do we bring that innovation logic into the forefront of the how we do innovation, the how we embrace change, the how we go about the activation of economic transitioning. So I would say to really firm up on the ability to have an innovation logic backbone to how you're approaching. It's remiss of me to not say that we communicate well as humans in our chosen dialect, but we also need to be sure that we understand the digital dialect. And that's not to say that everyone needs to be coding. Not everyone needs to be able to manufacture a home robot, but certainly the understandings of the building block of technology is just as important as learning numeracy and literacy skills.
Thanks, Leanne. We have a question from Tanque about the diamond example. Tan, would you like to ask your question?
Sure. Thanks, Leanne, for such an inspiring speech. I want to ask about the application as it relates to diamonds, because I work in this sort of wealth space in the Greater China area, and there's obviously a lot of talk about precious metals, about gems, and also about cryptocurrency. So where do you think the cost of application of blockchain to the diamond take up in China is? Because obviously it's a very big market with a very, very big sort of projection for take up. Is it still is it affordable? Or is it still at that very, very premium sort of end? And at what point does the cost of that technology drop to sort of allow greater take up and safer take up in China?
So one of our very first customers is Chow Tai Fook, and you would know Chow Tai Fook. There are 2,500 retail outlets in mainland China and Hong Kong. And the other really interesting customer of ours was in Singapore, the Singapore Diamond Investment Exchange, because we don't have ETFs in diamonds. There's no futures market. Yet diamonds is outperformed, silver and platinum in terms of its, metal exchanges. So Everledger is a zero-sum game within industry, in so much that diamonds, we focused on the certified diamond market. So each of those certifications yield a cost to industry, and a cost not so much as just the issuance of the certificate, but the cost of paper. You can't transport diamonds across borders unless there's the trade document and the certification and the physical diamond itself. So the transformation of that into a digital experience, both in terms of consumer but also trade, is really where we're sitting. I would say the big leap for us is diamonds has two sections of the market. One is in rough diamond trading, which of course relies upon the extractive industries in countries like Canada, used to be Australia, but we've closed our diamond mines down here in Africa and Russia. And the majority of those large-scale mining companies now are committed to blockchain itself as a technology and into Everledger. So we see, as we're getting more and more extractive industries bringing those volumes through, they will eventuate out into the space. But the biggest use case that we see is the de-risking of the supply chain and the accessibility into finance. We know there's a $4 billion shortfall in the mid-tier of the market with manufacturing, and most of that sits, of course, within India as well as within China. And we know that banks are interested in that increased transparency and bringing liquidity back into the market. And so the cost of the technology pays for itself. We do know, and we have early examples of where some consumers in the world, not China, but actually the US, parts of UK, the consumer is willing to pay more to know where the diamond has come from and bring together that certification effort. China consumers are a little bit different. They would rather seek out a higher digital experience in terms of the digital vault capability, keeping it as an investable vault. And I think it's a different market approach. So, different geographies are seeing the use of it in different ways. Yeah.
Interesting. Thank you.
Thank you so much for your question, Tan. It was wonderful. And thank you, Leanne, for the clarification. Richard Umbers is on the Zoom call, and he has a question for you.
Thank you, Leanne, for a fascinating presentation. You've made a reference to a number of different use cases, but for many years there has been a lot of discussion about the ASX plans to replace CHESS with distributed ledger. Is this truly groundbreaking, the way I've often heard it presented? And what's your perspective on using the technology on the stock exchange?
I definitely think it's groundbreaking, firstly from a perspective of being pioneering. I mean, they pioneered so very early in comparison to other exchanges in the world, and managed to really bring together the right set of team towards execution. So I think from that perspective, it's pioneering in its efforts. There are always a number of complexities when we think about the rationalisation of commerce and incumbents and those that could potentially lose in terms of the end game of putting in an entirely distributed layer, which of course the intermediaries, those that sit in the middle, potentially could be at risk or at risk of extinction altogether. I certainly know that blockchain from first hand is a highly complicated technology, and so building the skill sets around it with maturity over time on a critical infrastructure like the ASX should be tempered with sobering reality of just how difficult it is. We can't get it wrong, right? And nor can you get, the traceability of blockchains wrong, but it's an entirely different set of use cases. And certainly from an Everledger perspective, the work that we did, we could have applied our strength into many different environments, but we chose diamonds because they were unique. They were dumb in so much, and they didn't have rights in terms of private data. So, when you start thinking about people's embedded trading wealth, getting KYC onto the chain, looking at know your customer, privacy, that is highly complicated, and it just creates an even longer roadmap for maturity. I do think that the ASX is serious about its investment and continued investment in it. I'm not close enough to the project to be able to give you any more insight, but other than to say that I've not seen them fold back on their decision. If anything, they continuously invest in a really robust plan to bring it to market.
So that's a really lovely opportunity for me to segue to our chairman, who's also on the board of the ASX. So Yasmin, I might give you an opportunity to shed whatever light you're comfortable shedding, and to then ask your question of Leanne.
Yeah, look, it is a very a different application for blockchain, because as Craig was saying earlier about the distributed nature, this is actually a closed blockchain that we're building. It needs to be, because people who are trading and the various operators on the exchange need to be able to keep their data secure. Interestingly enough, the question earlier too was around regulation, and we're finding the regulators are really leaning in and are very, very interested in the project, because they get to see everything. We give them a key, and they get to see everything real time. So when you've got market routes, when you've got failures of market participants, which, I know there was a failure, I think 4 years ago, that we are still working through, those things can be seen real time. So the regulator is very, very interested in the ability to step in much faster and in a much more, proactive way. I think Leanne is very accurate in her, it is a long build. We tested it for 2 years. It's a 2-year build. The scale of it is massive when you think about the volumes that goes through the exchange, particularly actually in March, where our volumes sort of doubled overnight. So, there's a lot of complexity, and, we are still working our way through, and it's still somewhat, I think we're still, 12, 15 months off. So it is a big, big project, but we haven't, stepped away from it in any way. Thanks.
Thanks very much. Just a question about how the board got its head around the new technology, Yasmin, and the sort of sophistication that has now crept into your dialogue and into the discussion. What sort of journey has the board been on? Because one can imagine that the technology arrives, you've got the C-suite and management coming to you with the idea, and this is an enormous leap of faith. I'm sorry to ask, but I think it would be really useful for a lot of us on the call just to understand that journey that the board's been on.
Yeah, it's been a very long journey. We've been talking about it since Well, the decision was made almost after I left the board, and I've been on the board for after I joined, I've been on the board for about 6 years. So we've been talking about it for that long.
Right.
And the biggest decision was finding a vendor, a vendor who would be around for the period and who would be around post, going live. So that was a really big choice. But yeah, look, we do a lot of deep dives. The board has definitely come up in terms of the skill set. We have on level 8 of the ASX at 20 Bridge Street, we have a testing level where we take all our customers through so they can understand how it's going to work. And the board's been through that many times. Okay. And wherever there's a change in terms of, how we're building it or any, it comes up through there and we get to sort of see it real time. But the audit committee, we've had independent reviews of it. We've had 2 independent reviews. We've got the regulators, all 3 regulators all over it. There's a lot of because as Leanne said, it's critical infrastructure. We can't get it wrong. Yeah. And so there's a lot of layers of, insight and compliance around, how we're rolling it out. But the learning journey has been really, really interesting.
Fabulous. Thank you so much.
Here we have Local Government Authority of Queensland, 77 regional councils exist, and about 3-4 years ago Everledger began a piece of work. It's public. I think we won a blockchain award for it in government. And you can imagine 77 local government and council members, from mayors right the way through to councillors themselves, having to be educated around the meaning of this technology. And they looked at it from a perspective of probity and procurement. How can we be sure that there is, and of course the Australian Audit Office would be very interested in this too, that regulator piece. And so I think there is a big application around the fairness and transparency, particularly when we think about government. And I'm only hopeful that these smaller examples that existed with a couple of small pioneers like myself affords Australia a real big economic advantage moving into the future.
I agree with you. And I think one of the lessons that we've learnt from all the new technology is that by being able to show the thing in a way that people can understand and get there and touch and feel makes it a lot easier to bring down the barriers. Warwick Kramer has a question, and then Nikila, I'll come to you next.
Thank you, Marianne. Thank you, Leanne, for a great presentation. Leanne, I have a question around, in my previous role, we did a study on blockchain, and some of the difficulties that we came up with from a supply chain point of view is that we had something like 12,000 suppliers, and like IBM, Oracle, Amazon, etc., all creating their own blockchains. And one of the, I suppose, difficulties we came up with was, you're creating these sort of individual nodes, and the interconnectivity of those nodes was really paramount to make it work. How do you sort of break down those barriers, and do you think those barriers will be broken down by those organizations to have that interconnectivity? Because we found that was the biggest barrier for us to be able to roll out an effective blockchain strategy.
Yeah, so it's fair to say that IBM, Oracle have derivatives of a base open source formation called Hyperledger. And so it's fair to say that it's not really an Oracle blockchain or an IBM blockchain. Whilst they've hybrided up that over time, there is still some underlying core architecture that exists and continuously exists, and that is an open source initiative run through Linux Foundation. As Everledger, in our architecture, we sit across multiple disciplines. We even put our tokenization out into ERC 721 up onto Ethereum. So there are ways to band-aid interoperability if you're nimble and you have a leading motivation like we do as a small company to ensure that we can continuously do integration. I would say that the motivation of large companies like the IBMs, Oracles, AWSs of the world are less motivated to do that because they moat their customers. And of course, they make very interesting stack layers around, it must run on Azure with quorum, with consensus. And they're driven by really short-sightedness. It's nearly against the entirety of the reasoning as to why distributed technologies came into existence, why we have these technologies of the time. But what I will say is technically we'll solve interoperability, and that's not going to be a 10-year arm wrestle. We'll solve it rapidly, and it's going to come about not through the likes of the work with IBM or Oracle. It's coming about from other, leading core inventors that are passionate about ensuring that we're just not creating another reversioning of the internet with 5 large technical giants. You saw that work come out in Facebook, and of course with Libra and the cryptocurrency, which doesn't seem to have really gained any heightened excitement. But yet again, the large financial players came in, Visa, MasterCard, everyone, and they started to drop back off because it became too much of a closed environment. So the internet was originally architected to be free in terms of freedom of movement of data and information and a fairness, but it's not really seen as a digital global commons. So when I think about the global commons we have in the world, of the quality of our air and water and what have you, it's a big effect that we're moving towards in the SDGs, but we should now move to a digital global commons. Like the internet should be a digital global commons. How do we bring that together in a far greater way? Blockchain being one of those as well.
Thank you so much. Nikila, you've joined us from Indonesia. Welcome. You have a question for Leanne.
Yes, thank you, Leanne. My question is based on your experience. Yeah, I know that Australia, US, and China are ahead on in blockchain technology and business. But I would like to ask you, based on your experience, how because there's I think Indonesia is quite relatively new, yeah. But how to ensure, beside the legislation that you have already mentioned, the regulation, what other basic requirements to ensure that the consumer safe, secure in this blockchain business, and protect the children's and women in this business, how to give more impact to the society, doing this business. Thank you.
There are so many examples in the world that exist that advantages the tier nations you're speaking about. To a certain extent, Australia, the US and the UK are going to heavily govern, centrally control, mandate, over-regulate the technologies of our time. And rightfully so in that environment. But what we are already seeing in places like Bangladesh and Indonesia is the use of this technology in a peer-to-peer trade, whether that be the peer-to-peer trade of energy, water, even in gemstones. The work that we've been doing in Tanzania is also very interesting. So I feel as though that the escalation and the acceleration events that occur in Indonesia and Vietnam and places in the world like Tanzania are happening more rapidly because there isn't that interaction of, or the interruption of, centralized control authorities and governments. And therefore it does hit to the very heart of every citizen that's requiring the basic line services of water, of energy, of light, and even of an economic trade. To answer your question around how do you protect the consumer, the protection of the consumer, again, sits within the construct of education. I think the more that consumers can educate themselves through reading, through open enablement, you can become your own best trust marker. But otherwise, of course, some of the legislation falls back into governments, and some of those governments are questionable in their own right. So I would say the best movement forward is that we keep it open source, is that we enable education to be wide and fair, and that it's pioneers and inventors like us that say we are willing to go in and do peer-to-peer trading of energy or battery enablement storage of energy in places like Bangladesh, and we go there first. And I think that you are seeing many of those examples in the world.
Thank you so much, Leanne. The final question will go to Johanna Pittman, and she'll bring us back to Australia, and then we'll close after that.
Okay.
Hi, Leanne. Thanks very much. I was really interested in, particularly with your your position around and your expertise around entrepreneurship and how to drive the innovation ecosystem. You mentioned a couple of subsectors where Australia is already focused and doing really well. Beef Ledger, obviously Everledger around diamonds, and then with power. What are some other subsectors where you think we could combine our natural commodity assets with talent, where we've got a bit of a head start on the talent front, and where we could combine them to create new emerging expertise in new markets?
Look, I definitely think the biggest concern we have globally and even locally in Australia is just where is the demand? I remember in the midst of COVID when it hit so dramatically, engaging, we have about 35,000 entrepreneurs and startups here, and I was engaged with the founder Toolbox series, and I said to them, guys, read a book called Who Moves My Cheese? Because someone didn't just move the cheese, they moved the whole maze. Like, customers disappeared overnight. The purchasing patterns of where we used to spend disappeared overnight. So I fundamentally believe that with slight population like we do in Australia, with our borders closed for a significant amount of time, that the movement of goods is still critically important. And so how do we beef up, to a certain extent, our ability to reimagine advanced manufacturing, micro factories? How do we use the tyranny of distance that we have as an advantage? And because it will be even harder for multinationals to bring themselves into this nation. So therefore, we have really interesting opportunities on right to repair legislation. We have really interesting opportunities on digital twins, on our ability to think about circular economy as a core construct, rebalancing natural mining and urban mining. So, how do we disassemble? That for me feels like a really important new market making opportunity. The race for rare earths is on in a big way, but we won't be able to compete based on price. So is there magnet metals that we can mine here that might feed into the electric vehicle supply chain? Because we won't win the race of batteries, even though we're looking at it from perspective of, bringing significant onshoring. But is there the ability for us to take a second set of adjunct value-added processes that we can own the value-add process as well as the extractives? Because at the moment we just own extractives, and that's not going to last. Because when you think about the amount of infrastructure being built up through Mongolia into Russia, and the incredible amount of natural resources that are being pulled out of the earth there, the trade partnerships we have with Queensland or even Australia more broadly is disappearing quite rapidly. So we have great coal exports, but how long will that really last? And so what are these other new market making opportunities that can exist and bring it together? But I would say it's a quantum leap for Australia to start thinking about less than just digging the earth with shovels. We have to start being better at value creation. So what is not the supply chain of Australia? What is our value chain for Australia? Yeah. That's the key question to be asked.
And that's an excellent answer to a question to end on. That's all we have time for today. If you have any other questions you'd like to put to Leanne, please send them through to us and we will send them up to Leanne. And in a moment, a poll will appear with one question only, and I invite you to complete this before you log off. And while you're completing it, I'd like to direct your attention to the Advance Annual Survey of Global Australians, which is now open. You can access this from the website, and I encourage all global Australians to make the time. It takes between 5 and 8 minutes to complete, and it will help inform our service design to meet the aspirations of global Australians and to unlock the value for the nation. Please also note, as Jasmine mentioned, that we've got the Advance Awards on the 15th of October. They'll be broadcast at 8:30 p.m. Australian Eastern Standard Time. And with this, what I'd like to do is hand you over to Yasmin to offer the closing remarks and thank our very, very special guest and friend, Leanne Kemp.
My pleasure.
Yeah, I'm quite excited and stimulated about our conversation today. There's a very broad range of applications, Leanne, that you've taken us through, and just incredible. So on behalf of Advance and our guests in Australia and around the world, thank you. You are a great example of what Australians can do globally. We really do appreciate your generosity in sharing your expertise and know-how with your country. You definitely helped us understand how blockchain technology is emerging. I like the way you said emerging from invention to innovation and application to drive value for Australia. I think that's really important. I also like your link to our social contract with our planet, and proving provenance is a step towards that. The future really is now. So to everyone who joined us today, thank you for your time and interest. It's always a pleasure to see our global community coming together around exciting topics and great conversations. We look forward to staying in touch and continuing this conversation. And please do also refer to our website, advance.org. There will be follow-ups and transcripts and links to further conversations and events. Our greatest resource is our talent. Thank you all, and goodbye.